Today we're going to cover the cost basis page in the website. So let's get right to it. Here we are on the website, myatmm.com. So we're going to navigate to the cost basis page. This is the bread and butter of the application. This is where we enter all of the stock symbols that we are currently trading with. And this is the screen we use to track all of our ongoing positions, and it keeps up with the ongoing cost basis calculations as well. So coming into this screen for the first time, it just selects the first stock symbol that we have in here. We have 3 stock symbols in here, as you can see. Let's go ahead and just focus on, well, first off, just a kind of high-level overview of this screen. We have the stock symbol summary area here at the top that just shows a lot of the summary metrics, and then we have positions that are currently in play. These are positions that we are actively trading in our brokerage account, like any stocks that we've purchased, any cash secured puts we have going on, any covered calls we have going on. All of that stuff goes right here, and we just click new position, add a new one. And then there's this proposed records to add below. These are records that are just generated to read only, just informational only, but we pre-generate them here based off of the position calculations that we're entering. And the reason why it's here is because it was created as a helper to pre-generate the transactional records that you will need to actually add to your transaction history down here below. You could just kind of look at the position and think about what the transaction record would look like, and then you could manually type it right here, manually pick the date, manually pick the transaction amount, and then whether or not it was a stock or not. That's what this toggle is, and then click save. But I found it very helpful for it to just, based off the position, generate a record for you, and then you could just move it down there, like copy it down into this text box down here, and then you would have a starting point at least. You can still change the description, change the amount to whatever you want it to be, but it was a very helpful thing to have those proposed records added. And as I'm using this screen in this demo, you'll see what I'm talking about. Something else that's interesting about this screen, or nice to have, is you'll see these minus boxes here. You can actually use these to collapse these areas, and the reason why we do that is so we can see the transactions very easily. As you get a lot of these in there, it'll be better when you're navigating through these. Okay, and what I'm talking about on this is, so we have this collapsed, and we want to just navigate quickly through the transaction history. We can just click next, it'll go to the next one in the list, and you'll see it just swaps out the transaction history. So it's a very easy, quick way to look through all of your transactions, because as you get a lot more here, that'll become an issue or something you might want to look at in a faster manner. All right, something else that you can do on this screen before we get into the positions is you can actually, right now there's only 3 in this drop down, but as you get more and more stock ticker symbols in here, you can get quite a lengthy list, and you may not actually have positions in all of them. So something that I added is, so right now there's 3, and I think we only have positions in 2, but something you can do, you can actually click this, and it'll filter it down to only the positions. So you'll see now we only have 2. So apparently we didn't have a position in Apple, and you'll notice we had Apple pre-selected, but it moved it to MSFT after we clicked only positions. So let's show that again. So if I click that, see, it went back to Apple because that's the first one on the list, and we were selected on the first one on the list. So going to Apple, see how it changed the transactions out to show MSFT, and say we select the second one, go to only positions, it went to the second one on the list, which is MSFT, when we're not showing it. So that's how that's behaving. And all right, so moving on, let's see here. Yeah, as you can see, the add button is disabled, and it's because I'm only allowed to add 3 stock symbols. I have to upgrade to add more because this is the demo account, so this is not a membership account. So by default, the free account, you are allowed to add 3, up to 3. If you want more, you have to upgrade to a membership. So in any case, let's go on with this example. So right now these have positions on them, but I want to start from scratch to make this easier. So Apple doesn't have any positions, so we're going to go ahead and start adding some sample positions just to show you how to use this screen. So you start off by doing new position, and we're going to go ahead and start off as we usually do when we're starting off a new trade. We usually try and work the wheel strategy, or at least our version of the wheel strategy. And the way I do it with the wheel strategy is I open up a new position. The start date, we're going to kind of backdate this a little bit, and we're just going to say it was a couple weeks ago. We started this position on December 12th. Decide to open. A cash secured put would be a sell to open. So there's drop down values. STO, sell to open. B2O is buy to open. And when we're closing positions, it switches them out to STC, sell to close, and BTC, buy to close. We're selling to open. We're selling to open a put because that's what a cash secured put is. We're just going to do one contract, and we're going to say, since we picked 12/12, and by the way, the start date is completely arbitrary. It's not actually checking any math or doing anything with that date. That's just solely as a placeholder, just for information. Now, the expiration date does matter. So we're going to just say it expires Friday because weekly contracts, we're usually focused on ones that are expiring on those Fridays. The strike price, well, the last price it traded at was 131. So we're just going to guess, and we're selling a put. So we want it to be, if we want to actually get assigned on this for this demo purposes, we'll, just to stay and play with the numbers, let's go ahead and set that strike price to above it. So it would have seen that it went down. And the price we got for that, which is just the premium that we received for it, we're just going to make up a number and say we got 75 cents or $75 for the whole contract for that. So we click save. And by the way, if you did add something and you didn't want it, you can always click this delete button, and that'll delete the position from play. And just from us clicking save, it actually just saved it here in the positions to play. So it's only represented here. Now, I will say that the summary has updated. As you can tell, it's updated the shares from the puts, and it's updated the collateral based on this position. But that's summary information only, and if we were to delete this, it would go away and zero back out automatically for you, so you don't have to worry about any of that. So basically what I'm saying is, by adding this position here, it's just saved in our positions to play, but it hasn't actually been retained in our transaction history. When we clicked save the first time, it did generate this proposed record, and that's what I was telling you about. So based off this position, we could just start typing in something down here to represent that transaction. But for uniformity and conformity, to keep it all consistently laid out the same, what I did is I create a record for you. So you have some kind of format and pattern that will stay consistent through your tracking. You, of course, can do your own thing and type your own thing if you want to, but this is just here as a helper if you want to take advantage of it. So say I've clicked save. I want to retain this premium in our transaction history. So I would click this blue pointer finger to point. It's pointing down because it's going to copy these values on this row down into these text boxes. Now, I did notice that it didn't copy the date down, so that might be actually a bug. But in any case, we can switch it right here. And for the credit 75, another thing about this is a lot of trading platforms charge fees and stuff, so it won't be a straight up $75 credit. So they might take a couple pennies, or they might take, $1. So let's just say our platform charged us $1. So we didn't actually receive 75, we received $74 instead. And this toggle right here is just indicating whether or not it's a stock. This was not a stock because it was a cash secured put. So it's not a stock. And you can see the ones that are represented as stock have these yeses. It was just so we could distinguish between premiums and stocks transactions. All right, so now that we have that represented, we want to click save, and that'll save it and blank these out, and then you'll see the transaction was saved down here. Now that we have retained this $74 down here, now the number is going to be reflected in the summary up here. So our credits increased when we did that. It increased from whatever it was before. I'm guessing 789 minus 74 is what the original number was. It increased to 789, which will also adjust our cost basis with premium if we owned any shares, which we don't own any shares, so we're not going to see any number here yet. All right. So let's just say some time's gone by. This contract expired, and we're going to say it expired in the money. So we got assigned on it. And while we're at it, there's several different results that can happen from this contract that we sold. So one of the options is it could have expired, worthless. And if it expired worthless, you can just mark it expired and click save and move on. If you actually wanted to not let it expire, say it's December 15th and you wanted to roll the position, you could actually pick this and use it to roll, and you'd enter the next transaction or the next option that you're rolling it to. You'd enter its details right here. If you got assigned or if you closed the position, say you just bought the position back to close it. So that's the other options that there's other choices that this option can do. So it can be expired, you can roll it, you can assign it, or you can close it. And the UI changes based off of your selection to help you in that endeavor. So as you can see, expired and closed, those are in transactions, so there will be no next transaction for those, so that's why there's nothing below it. But for rolling and assigning, for rolling, you're rolling it to another option, most likely, which is why you have these strike prices. The reason why these are disabled is because we have to pick the roll type as a call and see how these enable once I do that. So if you're rolling a put, you're obviously not going to roll it to a call. So in this instance, we would be rolling it to something further out. So let's just say we were rolling this. I'm actually going to back it out here in a second because we're going to assign this so we can get a stock position. But if we were rolling it, I'll just say we opened this on 12/19. Or actually, no, we opened it on the 15th. So we're on the 15th and we're saying we're going to roll this put. We're going to roll one, and the new expiration would not be 12/16, but rolling it out to another Friday. The roll strike, we're going to go ahead and, so basically we're keeping the same strike, but we're rolling out to a later expiration date, and we're actually going to get 50 cents for this one, and then we'd click submit, and it would create a new position record for us, and we could go from there. But we're going to go ahead and assign it, and you'll notice that it'll change from these roll headers to assignment headers instead. So since we're assigning it, it knows that this is assignment, so it already does a buy to open on the side, and this is going to be a stock. And since we're assigning one contract, it's going to be 100 shares, and the assignment price is going to be the strike price. So when we click submit, it creates the new position because we bought some stock, so it creates the new position, and this position is no longer valid, so we can actually go ahead and just press delete to clean it up so it's no longer an active position in play. So that will go away, and now we have this new position. However, just because we have the new position, it is reflected up here, but it is not reflected in the transaction history. And you'll notice that we don't have a buy stock record down here because those all came from the options that we were clicking submit and save on. That's what generated those records. So if we want this record to pre-generate without us just manually typing something in, if we want it to generate a proposed record for us to copy to make it easier, we can actually just click save on this record again and see how it generates the record down here for us. So now we can press this blue button to copy those values into these text boxes, and notice how it set the is stock to true. It set the toggle to true. So now we can actually click save, and then it'll retain that transaction down here in the history. And once you've done that, then it updates the cost basis and all these other values to their correct state. So we've added some transactions. We've rolled a cash secured put into assignment. So now we have 100 shares owned. In the summary, it shows us the cost, shows us the current stock value based off the last price that it traded at, shows us an unrealized gain lost here because it's on paper, so we bought it for that. It's currently worth that. Okay, there's currently no cash secured put, so there's zero collateral, zero shares from puts, and the total premium that we've received so far while dealing with this is up to $7.89. Our overall is $7.89 because this is unrealized, so it doesn't account for that until it becomes realized, meaning we sell the stock back. And our cost basis, we have three of those. We have the cost basis without premium, so this is just our raw straight up cost basis, $145 a share is where we're sitting at. Then we have the cost basis with premium. So this basically includes the premium and shows us what our break-even price is down here, which means if we wanted to get out of the stock at zero, meaning zero profit, zero loss, then this is the price we would need to target to sell it for in order to accomplish that. Might need to be a little bit more depending on your broker, depending on fees and stuff. It might need to be a little higher, but this is the base amount, including premium. If we had some cash secured puts going on, this cost basis with puts would show you the cost basis if the puts you have on board got assigned. If they got assigned, then that's what your cost basis would be after that. This weekly ATR is the average trading price, or the average trading range, my bad. If you hover over that tooltip comes up to show you that that's what that means. And that's just the average amount that this stock moves in a week. All right. So before I get to this position adjuster, I want to show you just the next step to try and complete the cost or the wheel strategy. So the next step, since we own the stock, you would want to sell a covered call on it, right? All right, so we just enter new position. I'm going to go ahead and keep this start date the same. We're going to sell to open. This is going to be a call. We're going to just do one contract because we only have 100 shares. And we're going to say, since we already did the 16th and I think, did we do the 16th? Did we do the 23rd as well? Let's see. No. No, we haven't done the 23rd. So we're going to just still backdate this. So we're doing the 23rd, and we're going to do a strike price. Now, see, here's the next thing. The strike price, we bought it for 135, but as you can see, our cost basis is based on historical transactions that we've done in the past, meaning we've sold it in the past at some point for a loss. So our cost base is still higher than we bought that for. That's how that happened. Basically, we had bought and sold the stock in transactions, like a month ago or a week ago, or just some point in the past where we happened to sell it for less than we bought it for. So we had a realized loss. But when we jump back into it, when we bought some more stock, then I basically take that amount and add it to this, so we still have an overall cost basis. It's an ongoing overall cost basis for this stock ticker symbol, basically for all time that you've ever traded it, so you can keep an ongoing tally. So if you had big losers in the stock symbol, all of that will be accounted for in any new position you open up in it. And I do that so you can basically keep track of the stock performance over your entire lifetime with it. In the future, there might be a way to reset that. And honestly, the way you could reset it yourself without having to do that is you basically just delete all your transactions, and that would clear it out. That would clear it out and reset it back to zero if that's what you really wanted to do. So you do have the ability to do that. All right. So sticking with our current strategy and the current plan for this demo is we want to always keep 100% of our credits and just sell or target the cost basis. Yes, we may not be able to get as much premium depending on how far out this is, and how high the cost basis is compared to what the current trading price is. But this is a demo account, so we can do what we want to in this one. So the strike price, we're going to say 145, and we're going to say instead of getting those $100 premiums, say we can only get $25 for that one. So since it should generally be a lower strike or a lower premium. So we click save on this covered call. Again, it generated the proposed record down here. This has not been retained yet in our transaction history. We want to click this blue icon to move this text into these text boxes. We do that, because we don't want to type them in manually. We want to, be a little lazy and let this do the work for us. And again, we didn't get the full 25 because our broker charges us $1 fee, so we take it down to 24, click save, and now that credit has been saved. And before this was $7.89. See how the credit has increased to $8.13, and it updated the cost basis with premium. It took it down slightly because of that premium we collected. So there we go. We have done a cash secured put, got a sign, bought the stock, then we sold a covered call on it. And the next step is if it goes up to 145 in the next week and we get assigned, then again we'd pick assigned and we'd do the next transaction. This would be a sell to close order. And we just keep on going on these positions as needed on the stock ticker symbol. Okay, what next on this screen? I think that covers a lot of it, pretty much all of it. You can keep on watching our weekly videos as we, roll positions, close positions, expire positions, depending on what happened with them. Something else on this screen that I have is this show position adjuster. And what this is I'll go ahead and click it, it'll show it down here. So just highlighted right here. So what this allows us to do is, say the stock has dropped quite a bit. Say it was down at $100, which it's not, so it'll be fun to say, well, just for, say we want to bring our cost basis down to something closer to 131. Say we want to bring it down to 135. We want to bring our overall cost basis down to 135. So the last price it traded at, it pulls down automatically, so that's accurate. We currently own 100 shares. Our current cost basis is 145. So our target price, say we want it to be 135. So our target price would be 135. And when we hit calculate, it will go out and calculate the number of shares needed to purchase at this price, or this price I should say. You have to purchase 302 shares at that price, which will cost this amount, and that will bring our overall cost basis down to 135. So this is an adjuster on the position. It basically tells you how many shares you need to buy to get this target average price. And that would be helpful. Say you didn't want to do cash secured puts. You didn't want to wait for the whole wheel strategy, cash secured puts, covered calls, cash secured puts. You don't want to wait for that whole thing to play out to bring your cost average down. Say you just want to purchase stock straight up to lower your cost basis down. This is a way to figure out what you need to buy in order to make that happen. And one reason why you might want that to happen is, say you want to get out of this stock, but the premiums that they're trading for at 145 aren't happening, or more so, the chances of it coming back up to that price are slim and none. So you want to bring your overall cost average down to a low enough number to where you can sell a covered call, get a lot of premium on it, and the likelihood of that hitting is really high. So what you would do is you'd buy the 300 shares, pull your cost basis down to 135, and then you turn around and sell a covered call for 135, thinking or anticipating that would take place. And you'd get called out, and you would break even, and you'd keep all the premium you've ever sold on the stock. Something else this calculator is capable of doing is, if you want to figure out how many shares you need to get the average price down to 135, but you want help, so you want to go ahead and include all of the credits you ever received. And the reason why you do this is if you just want to get out of the stock. Say you just have a really bad feeling about the stock, or it's not paying you the premiums you were wanting. It's gone down to like not being a very profitable from a cash flow perspective trade. So you just want to get out of it. Something you can do is click this include credits, and you'll notice how this changed. Let me do that again. So see, it changes from not applicable to including it, and basically all it's doing is it's pulling in your total credits received into this calculation. And then you hit calculate, and notice right now it says 302, but it's going to lower because it's going to pull in our premium and base that off of everything too. So see, now to pull our cost average down to 135, including credits, we only need to buy 56 shares. So if we bought 56 shares at the current price, it would pull our overall cost basis down to 135. And then we would get that price. And then what we could turn around and do is sell a covered call again on that, collect a premium on that. But if it got called out, then we would only be able to keep that premium basically, because it would be the only premium that's not in this calculation. So it'd be the only premium that we pocketed overall if you followed that. So it's just a way to see where you are, where you need to go, and how you can play these numbers to where you come out with, a profit, hopefully. So it's just a way to track all of this information. So that's the cost basis screen. I'm just scrolling through here. I'm pretty sure that's all the rest of it. I do want to tell you, I did tell you earlier how you can delete these transactions if you want to. Something else you can do, say that, the $24 fee, or the dollar fee, it was $25 and we took it down to 24. We'll say we were wrong. It wasn't a whole dollar. It was only 85 cents or something. You can actually click edit and edit these records. You can change the date, you can change the text that you entered for the description, and say it wasn't a dollar fee, it was only a 75-cent fee. So that was actually $24.25. So we click save, and that will retain that, and it updates, all the summary calculations up above in accordance with that. And if you don't want to see this, of course, you can click hide, and it hides that position adjuster. So anyway, I think that is a good explanation of everything on the cost basis screen. So thank you for watching. Like and subscribe if you haven't already. And if you want to get your free account today, you can go out to myatwm.com and sign up for your free account today and start using the application. Thanks again, and I'll see you in the next one.